Hey YouTube, back with another video today, and today I wanted to go over kind of what's going on in the stock market, and a lot of people are getting burned, um, and I just don't want people to be worried about that because as an investor, as somebody who's trying to build your financial future, you should think about things in the grand scheme of things, the long term, and I think a lot of people who are investing also have very little patience, and over the years, statistically speaking, people have held stocks less and less. And I understand that because the changing industry has really changed a lot of things fundamentally on how the internet can interrupt tons of businesses, and they can develop better products faster. But there's some solutions and some companies and some things that stand out above the rest. And I kind of wanted to go over what I think could happen in the near future. And right now, it could go either way, just like all stock markets. It can go up, it can go down. But I think we're on the precipice of potentially having a really great rise this year, kind of going back to 2017, where we have like a large stock market like rush in after the markets kind of get a little less muddled. Or what we might have is finally, hopefully, or not hopefully, depending on how you look at it, especially if you're looking to retire right now, the stock market correction, when you end up with this kind of fall back into this whole entire situation. As an investor, as somebody or an entrepreneurial mindset, you should be thinking about all the things that you can do to prepare yourself for the future and be ready for any kind of event, I guess you could say. So be very diversified. Don't just have stocks. Maybe have gold and silver. Maybe have cash sitting on the side. Maybe have like real estate investments. You know, if you're going to diversify yourself, you need to be really diversified. And I think if you can do that, if you can start developing these kind of things at an earlier age, you'll have a much more advantageous situation going on. And listen to what people are saying, but also what they're doing or not doing. And I think the biggest thing is look at what Warren Buffett does. Is, you know, everyone talks about one of the greatest investors of all time and what he has a tendency to do. And he's talking about how he wants to buy, but he's not buying a whole lot. And well, yeah, that's because the market is up. Why would you buy when everything's expensive? And people do this all the time. They find a product, they impulsive buy, and the market has that same thing right now. People are buying stocks that are really highly valued, or you know, they're just, you know, oh, they've got all this growth potential and they're growing exponentially, and I'm going to get involved with that kind of stock. I don't think that that's the best situation. You know, great when stocks are growing, but you have to go back to the company's fundamentals. Are they profitable? How is this shaping the industry? What kind of profitability will this company see in the future if it can grow and last through a financial correction? And right now we have the situation where, you know, we have the Amazon out there and what that's doing and how that company is amazing and how it's gobbled up so many things. But you have to realize Amazon wasn't profitable for a really long time, and everyone's trying to get in on the next Amazon, and I just think that's dangerous. It's really dangerous, guys, because you could be investing into a stock. It's like $40 a share, but they haven't been profitable for the past 3 years. And what happens to those kind of stocks when a stock market correction happens? We're talking like A-bomb nuclear stock market correction, and those stocks, the high growth stocks, take a dump. People pull back out of those stocks quickly, and they go into what's tried and true is the companies that can build them steady wealth during economic downpours or down times, that puts out a high dividend. And I think that if you guys are starting to think about what's going on in the markets right now, I think you should start playing the defensive game. Keep your money on the side. Keep your money, like, just start accumulating your cash. Wait for the dips. Maybe you invest then. Maybe you wait it out a little bit more and see if the market decides to go down even further. But I know so many people that like to go and buy things when they're going up. Don't buy stocks when they're going up. Buy stocks when they're going down. You want to like invest into things when they're on sale, not when they're expensive. And you know, companies do this too. And I think it's silly. And you guys need to start thinking like that. Think red is kind of good instead of red is bad. When the when the stock market takes a correction, you're like, oh, okay, well, you know, I lost some money today, but is the company's valuation, are they still profitable? Do they still do all these awesome things? You know, do they still have really good customer reviews? You know, what is the company doing? Is it doing exponential growth? There's tons of factors that you must consider when investing into a stock. But I also think that you could keep things simple, keep them safe by just thinking, be fearful when people are greedy, and greedy when people are fearful. How long do we have until the stock market takes a crash? Well, that's a really good question because no one really knows that. I don't know that because if I did, I would be a billionaire. But if I did have some kind of idea on when the stock market was going to take a correction, guys, I think we have about 1 to 2 years. I don't think we've got much more longer on this bull run until we start seeing, you know, some problems. And we're already starting to see some problems right now. If you've seen some of the choppiness that we got in the stock market right now, and I want you guys to be prepared for, you know, what would happen if you lost 50% of your portfolio in a day, or maybe not a day, but over the course like of a month. And that's something you guys need to think about. That's really important. What happens if this starts to take a 50% correction? And so I think NVIDIA is, if this market takes a stock market correction in the nearby future, and you see NVIDIA drop to PE ratios of 10 and below, I would buy the crap out of that stock. It just seems like one of those companies that I think is going to explode over the next 20 years. You guys have to think about the future when you're doing your investing. And a lot of people have their eyes on NVIDIA and they're dive bombing and they're kind of dogpiling into this stock, just like they did with, you know, I think Amazon. And yeah, if things go good and everything goes swimming, this could be a great pick. But you know, I'm one of those type of investors that only likes to buy into stocks that have either really good PE ratios or no PE ratios, and hopefully they're profitable because I'm a bargain investor. I don't like to invest into companies that have incredibly high PE ratios until the stock market takes a correction. And when the market is up right now, which it is, guys, it's pretty up. You guys have to think about your future too. So thank you for watching my videos today. This is a 2-part series. Like if you like these videos, dislike if you dislike the videos, and if you really like the videos, guys, please subscribe.